Thank you, Madhuri. Good morning, good afternoon, and good evening to everyone who is taking out time on Saturday to listen to this session. And welcome to my co-panelist, Rajiv Menon from Cisco, Ruchira Shukla from IFC, and Arjun Anand from Verlinvest. And these are all investors who are very long-term, very strategic. So we are going to not get any momentum answers from them. And it's the right topic for them because we are talking about the next decade. And before we get into the meat of it, I'd like for each of you to sort of introduce yourself and say a little bit about what in your individual capacity as the head of your organizations, what you're doing. Ruchira, of course, we have to start with you.
Thank you. Can you hear me all right?
Yes, very well. Go ahead.
Wonderful. Well, pleasure to be here, and always an exciting topic, so it doesn't matter whether it's a Saturday or any other day of the week. I am Ruchira Shukla. I'm based in Delhi, and I lead IFC's disruptive technologies work in South Asia, which means that I invest in early stage tech startups. We take equity positions, and we also invest in VC funds. I wear a second hat at IFC where I am the global sector lead for health tech. So for health tech investments, I'm responsible for building IFC's global portfolio, both seeking out good investment opportunities and then managing the portfolio, and also a whole bunch of ecosystem building initiatives which would allow the creation of solid health tech solutions going forward.
Thank you, Ruchira. Rajiv, you want to go next?
Sure. Happy to. Hey, everybody. Good to see you all and pleasure to be here. Thank you for the invitation. I lead Cisco's corporate development Asia Pac in Japan. And a little bit about us, acquisitions and, sorry, Ashish, I'm hearing a lot of background noise. I don't know if it's one of us or someone else, but okay. That's good.
Is it better now, Rajiv?
Yeah. Thank you. I was just saying, acquisitions and investments have been an integral part of Cisco's growth strategy for a long time. And really, the corporate development group at Cisco is kind of at the pointy end of that strategy, of the execution of that strategy. So what we focus on is investing in the next generation enterprise technology, both via acquisitions as well as venture funding. And that's kind of unique to Cisco, where the same deal team, folks like myself, do everything from venture, where we're very active, as well as M&A, where also we are very active. And we've been doing both of those activities for well over 25 years. Our first acquisition was back in '93. We've been acquiring companies consistently since, and we're as of a few weeks ago, completed our 226th acquisition. And on the investing side, I couldn't tell you how many over that period, but I can tell you that as on date, our active global portfolio is 120 plus companies. And maybe one other thing I would say, Ashish, is what makes us perhaps stand out a little bit is our incredible focus on making the startup successful through and via Cisco. We're a 50 billion revenue technology enterprise. And so our team globally, which is about 50 people, is about 70 to 75 deal folks like myself and 25 to 30% portfolio development folks who do nothing but help leverage the power of Cisco for these companies. And there's many examples which I won't get into right now, but that's a brief version from my side.
Very interesting, Rajiv, and well done over the years. Arjun, would you like to go next?
Well, thanks, Ashish. Hi, everyone. So I lead India and Southeast Asia investments for Verlinvest. We are, I guess, a single family office, but all we do is invest in private companies, which is related to consumer brands. So this can be online, offline. So I guess most of our portfolio today is, I would say, started offline and then went online somewhere along the way, but our focus is on consumer brands. We've been around for 26 years. We don't have separate funds. It's one vehicle. And so we can think in terms of decades, and that gives us, we think, a strategic advantage. We have a portfolio in India which consists of Byju's, Sula Wines, Epigamia Yogurt, Purple, Wakefit, etc.
Thank you. Before we look ahead, let's look a little bit in the rearview mirror and just take a pause and see what's happened in the last 5 to 10 years and how has this ecosystem grown multifold and what the underlying factors of this might be. So Ruchira, since you spoke about ecosystem development, what was IFC's view and how do you see the last 10 years of the space? What's been your experience?
Yeah, thank you, Ashish. And we are the long-term investors. We've been around in emerging markets for a very long time. So it's good to get that question, and it helps us think about what's happening today versus what happened in earlier years. In the venture ecosystem, I would say, from 2010 to 2015, a lot of what we were seeing were business models from elsewhere being brought to India. So, entrepreneurs, investors, we all have that playbook where this has worked in the US, let's try to make the India version of this. This has worked in China, let's make the India version of that. And a lot of companies got created, capital came in, but because it was always trying to replicate something that had worked elsewhere for India, the tough learning there was that India is not like any other country. India is unique in very challenging ways. And what ended up happening is a lot of companies did not succeed because they just couldn't figure out how to adapt the model for India. And those that did turn out to be relevant replicas for the country, you saw a lot of capital crowding into 3 or 4 players in exactly the same space. So there was a lot of competition and investor capital was not used in very productive ways in those years. It ended up, people were paying up to get into a deal, which resulted in very frothy valuations, particularly as we'll all remember around 2014, 2015, everything became way too expensive. And I think somehow things started shifting in 2016 and 17 when investors started seeing the traction in some of their portfolios and realized it takes time for the promise to be delivered in execution. And then there was a rationalization of valuation. And the other thing that happened was entrepreneurs, the new crop of entrepreneurs that started coming into the ecosystem became more focused on solving India-specific problems. So they were asking themselves a question about what is it that India needs in this space and how can we find the best business solution for it and build a commercially viable business while solving that problem. And that attracted a new crop of investors and more capital from the earlier ones. So the capital story has stayed consistent, but I would say that in the recent past, we've seen a much better quality of, a better pool of businesses being created, entrepreneurs that really want to create lasting companies. And that therefore presents a great opportunity for what we're seeing today.
So better quality of entrepreneurs, more maturity, more capital. Rajiv, any other factors you think have caused this surge, and are they sustainable?
Sorry, your question was any other factors that have caused this growth?
Yes.
Yeah, I think there's a multitude of factors. Maybe the one I would highlight is the fact that, Ruchira was talking about kind of what happened up to 14, 15, and there was a bit of a dip, and then, we saw sort of a second or third renaissance, whatever you want to call it. I think one thing that has led to the current success of, for example, solutions that work for India or other things, this sort of second time around entrepreneurs or third time around, right? People who've had successes coming back around to back companies as investors, advisors, or operating roles, and actually talent from slightly lower in the previous from the previous organizations as well. So we've seen a lot of this talent become extremely experienced, and the conversations in recent years, a lot of management teams and founding teams are very different from what they were, call it, in the early sort of 2012, 13 and things like that. So I think that's great. That's sustainable. That's going to continue to grow. And I think that's great news for India's ecosystem.
Great. So it's not a flash in the pan. It's long term. It's secular. It's sustainable. Let's now look ahead a bit, and let's talk about COVID. And many people believe that COVID has been a watershed event for the industry, for entrepreneurship in general, technology in specific. Arjun, let's start with you. What's your view on that?
So I think watershed event is a very strong, word. I would say that there were obviously trends, secular trends of everything moving more digital, even before COVID. So an acceleration is probably more appropriate. And if we look back on it 10 years ago, whether COVID had happened or not, 10 years from now, whether COVID had happened or not, digital acceleration was going to happen. It's probably skipped a couple of years thanks to this stark nature of COVID. The other thing that COVID has obviously done has tested the resilience of management teams. Now, it doesn't matter whether you are COVID positive or COVID negative from a sectoral standpoint. You've still been tested on resilience just because of the enormity of what has happened. And that should be very good experience in the next decade to come. And I see to what Rajiv said, these teams will go on to create very, very long-lasting businesses because of the experience they've had. So it's extremely positive, accelerated. Today we are in this, what all of us know is a bit of a liquidity bubble. And so things will calm down. We've all been through multiple cycles, but the advantage of being long-term for all of us in the panel here, I guess, is that in the long term, the ride will go up. Maybe there's some bumps along the way.
And hey, Ashish, if I could just jump in with a quick comment, I agree. I mean, watershed or not, one thing is very interesting in the last 12 months is that have become used to investing in companies without actually in-person meetings. That was unimaginable previously. And I can't tell you the number of investors who've told me, yeah, we made 10 investments for the last 1 year. And that was just quite not imaginable previously. So I don't know whether you call that watershed, but I think it's a very turning point for the industry.
And I'm sure that trend is making everyone at Cisco smile, right? So much of Zoom, etc., happening. Ruchira, coming back to how do you see COVID, and what are the other sort of fundamental factors that are going to drive the next decade, for this industry and for startups in this region?
Yeah, I'll pick up on that, Ashish, and also on one of the things that Arjun said, the resilience. That came as a huge positive surprise in some cases, right? Because when COVID first started, one didn't know what to expect. And one thought that, when I looked across the portfolio, we said, some may not even survive, right? And every investor was worried about that. Every CEO and founder was worried about whether they'll make it. Why? Because, with the successive lockdowns we had, revenues were wiped out. Any business that had a large offline component just didn't know where to get customers from. And it forced certain changes. It forced companies to pivot. So those that were offline started building an online presence. Anything that was digital saw tailwinds. Consumers started pivoting to consuming goods and services more digitally. It brought a whole new wave of tech adopters that would have taken maybe 18 months to 2 years to come online, but were forced to come online because there was no other way to do things that were essential to your life unless you could do them online. And so there were shifts across sectors, right? And the tailwinds and the headwinds started playing out. But most importantly, to Arjun's point on resilience, it's how the management teams and board members, investors got up together to solve this issue, right? There were cost cuts, very planned, very thoughtful cost cuts across most companies. A lot of startups, CEOs and senior management took salary cuts themselves just to extend cash runways. Investors came together to do bridge rounds. There was a time at IFC in the summer of 2020 where we were saying, stop new investments. Let's use all the capital to extend cash runways for our existing portfolio. So the fact that everybody came together to solve for survival actually came out stronger. And the companies that prevailed became even stronger than they would otherwise have been, which then led to more capital coming in, because now the investors that are looking at the ecosystem, COVID has helped separate the men from the boys. And the ones that are doing well are actually have proven themselves in a crisis. True. So I think that's what we're seeing. That's what explains some of this liquidity, is investors coming in and saying, okay, the businesses that are now around and have learned to make it work are the ones that can survive in a crisis. Looking forward, I think there are a few things that will continue to happen that will drive the next 10 years of growth post-COVID. I mean, tech is here to stay. And I was talking about the omni-channel approach. I think the time has come when no business can say, I'm not tech. Tech is ubiquitous. And if SMEs will get digitized, retailers will adopt tech. And so tech adoption will lead to offline players becoming electronically connected to their customers and more new business models happening. There will be more inclusion. So a lot of financial inclusion, consumers, new segments of consumers being digitally included, all of that will result in, again, a new crop of businesses that will drive economic growth. So I think going forward, I mean, provided, of course, that we can keep COVID in check, we're still not out of the woods, so we should be very cautious in celebrating just yet. But I think if we can somehow keep this in check, I am very optimistic about the future.
Yeah, I think resilience is something which has been a common theme across multiple funds. Let's talk a little bit about a couple of other factors. More recently, the China regulatory sort of clampdown and what it means for India in particular going forward. Any views on that? Rajiv?
I don't know that, I mean, there are some obvious questions, given what's going on, perhaps the capital inflow into China will slow, right? And will some of that capital find its way to India? Quite possible. Will it find its way to some other parts of the world? Quite possible. So that may be one obvious, implication. And it's shows India in a I hate to say this, but in a clearer light as being a democracy. I personally at least can't imagine anything like that ever happening in India, right? So it shows India in a positive light. So I would think, I would hope the situation in China improves for all investors, but if it doesn't, I think it may be positive news for India.
Ruchira, you have a bird's eye view of this. What are you seeing? Are you seeing any shifts in capital because of that?
We invest across 120 countries, and both India and China are important markets, as is the rest of Southeast Asia for us. And I would say that in the last quarter, we've had, IFC portfolio has seen 4 IPOs in China. Now, there is concern around some of the recent developments and the impact that can have on listed assets. So we are watching the space carefully, but it's too big a market to ignore. I think we will continue, at least most DFIs and IFC certainly will continue to do work in China. And we also look at it from a positive light in the sense that there's talent coming out of China that is helping businesses in the rest of Southeast Asia. And that will allow some of those those countries to see a more thriving tech ecosystem and attract more VC capital. So I think all of that is positive. And I do think the time has come for us to not think in terms of countries, but for regional businesses to be created. I encourage a lot of my IFC's portfolio companies to become regional or to go global, because the world is increasingly becoming more interconnected and there's no reason for us to think in terms of country silos.
Sure. Arjun, coming to you, I want to touch upon one topic which is very sort of thematic and very relevant in today's world, which is around ESG, right? And a lot of families and institutions are are looking at that. To what extent is venture investing adopting the ESG sort of framework and pushing it through to their portfolio? What are you seeing? What are your thoughts on that?
So Ashish, that's a very good question. Look, I think ESG, the digital has been around for a long time. ESG is what you're going to hear more and more and more over the next decade. There's no doubt about that. It starts with capital allocation. I think there's already an incredible amount of capital allocation towards chasing sustainable investing and sustainable companies. And so what happens is automatically every board is solving for ESG. And if you didn't have ESG in the past, regardless of where you are on your baseline, you will look to improve. And it's become an extremely important topic. In terms of allocating to VC funds or PE funds as well, we see from our lens, at least, this becoming more and more an important topic of what is this fund manager going to do in the portfolio that they manage in terms of ESG. But ESG is still not measured in a standardized way. And that's what I think will evolve very, very soon. There are multiple types of bodies trying to solve or at least standardize this issue, because today everybody has a different definition of ESG and you can focus on different parts of what ESG is. I think the largest one that has gained attention is climate change and how do you solve climate change? Yeah. And there's an incredible amount of talent and capital going hand in hand to solve that. It's very, very topical and I don't see this going away. And I see it increasing and you'll be surprised by the amount of attention it is being received even in India. And what this has led to is that there's a grassroots level change. We are seeing, being in consumer businesses, consumers making choices which is more sustainable for the planet, and hence automatically business have to gear towards that. I can give you a few examples just within our own portfolio. So we recently backed a company, a brand called Who Gives a Crap. It sells toilet paper online. And what it does is it sells 100% recycled sustainable toilet paper, and it donates half of its profits to building toilets in Africa. And they are very loud about it. They're a mission-driven brand, and they are obviously called themselves Who Gives a Crap. And they've it scaled at an enormous pace. The company is based out of Australia, and over 3 or 4 years, it scaled to $100 million of revenue, which is unthinkable 5 years ago. Similarly, we have another company called Tony's Chocolonely, its mission is to create chocolate that is slave-free. So it goes back to the cocoa supply chain and make sure there's no child labor and labor-related issues. And these are the kinds of things that I'm seeing accelerate in a very significant way in the next decade.
It's very interesting what you said, Arjun. It's, most of these things, we wait for the standard responses. Let's wait for the regulators to push it on the industry. Let's wait for the economics to work out on renewables or recycling or whatever. But here you're talking of a consumer adoption of that, which is going to drive companies to take it forward. On that, I mean, shifting to trends, investing trends. What are some of your top themes, and what do you expect to be winners out of this part of the world, Rajiv?
Yeah, look, as enterprise tech investors, maybe I'll shine a light on that. What's been incredibly exciting over the last, few years, and we expected this back in 16, 17, and luckily we've seen it play out. And then looking forward, it's the same thing, which is, the position of India as a strategic market from where globally relevant enterprise tech innovation will come out, I think is sealed now. And, we already know the examples of Dhruva and Freshworks and things like that, but we've seen some really amazing companies emerge and win globally. Whatfix, Unifor, and actually the list is very, very long. And so we are super excited. I think back in 2017, off the top of my head, the total venture dollars going into enterprise tech in India were, I think, 1.5 billion or something like that. This year, they're forecast to be around 5 billion.
Right.
And I mean, 5 billion going into enterprise tech. And there's a lot of reasons for that. We had always believed that with, back in the 80s, with the tech services boom, I mean, there was a lot of talent, and there's a multitude of things that have happened in India over the years that should lead to something like this. And actually, we've seen it borne out. So we are super excited. And if there's one thing I want to sort of highlight or focus on over the next 5-10 years, I think it would be that global winners, relevant companies that come out of India in the enterprise tech space.
Very interesting. Global winners coming out of India in the enterprise tech space. So keep your takeout. I already see some people take out their checkbooks for that. Ruchira, turning to you, what are some of your favorite themes and what are you most bullish about?
Very bullish on health tech. And COVID has taught us that this is important. It's taught us how little we know and how ill-prepared we are in managing the healthcare of our people. I think digital health tech will really be the solution, right? We already begin to see virtual care platforms, teleconsultations. It's almost like COVID was a wake-up call and people realized, look, I don't need to go see a doctor. I can actually call a doctor on the phone. It's something you always could have done, but just the presence of a pandemic made it real and made it present, right? So teleconsultations, e-pharmacy, e-diagnostics, so in a way, integrated digital health platforms are coming into being. I think there is a move towards higher amounts of data analytics and AI in diagnostics. So we're seeing smart imaging, smart diagnostic devices, which are portable and have the intelligent layer built in, which allows for more efficient training of the new crop of doctors. It allows for a lower cost, easier access of those same screenings. So we've seen focus devices, point of care ultrasound devices, AI in reading of radiology images. A lot of those solutions will make diagnostics more effective, efficient, and affordable. Precision medicine, I think, is now becoming within line of sight. IFC just did an investment in MedGenome, which is India's leading genomics business. And we're tracking genomics businesses in Africa and Vietnam. And I think you'll start seeing more of that happening. And there are SaaS platforms, Innovacer based out of US, which is actually an Indian company, but aggregating electronic health records to try to then build analytics on top of that and allow for better population health data management. So I think health tech for me is a theme I'm really passionate about. I think we'll also see a lot more traction in fintech because micropayments, buy now, pay later solutions will become more ubiquitous, and fintech will be embedded in other businesses. So there'll be health tech with a layer of fintech, edutech with a layer of fintech, B2B commerce with fintech. So fintech will also become quite widespread. And the third theme I think we're looking out for good action in is agritech. There's still a lot of food wastage in emerging markets. There is digitization of agri supply chain that can help bring more efficiencies to farmers, increase farmer incomes, and reduce food wastage, which is very important for the carbon footprint of the world. So I think those are some of the themes we are looking out for.
Very, very exciting, because I think both health and agri have been around for a while and have shown great promise. And it looks like finally the multiple S-curves on which are hitting healthcare along with are also meeting with greater adoption. So clearly a space to look out for and be focused on for VCs. Arjun, I can more or less guess what your favorite themes are, but love to hear what your thoughts are.
Well, I'll keep it very brief, Ashish. As you know, we invest only in the consumer sector. So broadly speaking, I think the mega theme we are going after is the fragmentation of how you segment a consumer. Before, you have to broad brush a consumer because there's no other way to build a business. But now, because of the last 10 years, and thanks to this capital that set the infrastructure in place, the Flipkart and Amazon of the world has put in place such a structure where you are able to then target much more niche, segments of consumer. And so we see a lot of insurgent brands catering to different classes of consumer like we've never seen it before. And so we're going after that. And this could be health and wellness, work from anywhere, all kinds of consumer products and services, which before was never able to target such a let's say, very focused consumer set now can do it because of the infrastructure in place.
Could you sort of clarify that with an example that you can share for us? What do you mean by niche and micro segmentation? Or
Sure, I'll give you a very, very simple example, right? So before, you could never target a particular age group, let's say teenagers who are looking for health and wellness in a new format, like let's say gummies to take your vitamins, because this is too small a segment for you to target. And the way to advertise for consumer brands was TV and things like, and the way to distribute was through these mom and pop shops like Kiranas and so on. Today, thanks to Shopify, the infrastructure from logistics, warehousing, etc., possible, you're able to create a brand with much less capital to target this niche who wants this good, but then it was too expensive to reach them before. Now you can reach them thanks to, from a marketing standpoint, Facebook and Google, who made it effective to reach micro audiences, thanks to the infrastructure of warehousing and logistics to make it effective enough for you to deliver your good to those consumers and so on.
Great. No, thanks. I think we've got about a minute, but I'd love for all of you to summarize in terms of what you see we would be doing. Supposing we were sitting 10 years from now, what would this ecosystem look like in terms of scale, size, opportunities? So again, Ruchira, you have the privilege.
Well, I hope this will be a much, much bigger market than it is now. I hope to see a lot of Indian startups being listed on global exchanges, listed on domestic exchanges, to have shown investors that full journey. We hope that we will have Indian companies going global, as Rajiv mentioned, but also regional businesses across Asia, and other companies from other countries coming into India. So we want to see that cross-pollination of ideas lead to creation of businesses that cut across geographic boundaries. So I think larger businesses, better liquidity for investors and monetization opportunities through the public markets, and just a thriving venture ecosystem all around.
Arjun?
Ashish, first, I hope we'll all be in person 10 years from now and not on Zoom. But apart from that, look, I think there's no doubt it will get bigger in India. We're only in the second cycle really of private markets in India. And so obviously the third and fourth cycle is going to only get bigger and better. And I really do hope that we see a lot more talent, which clearly I view India as an untapped talent base, and all of that talent gets funneled in the right way to create very enduring businesses.
Rajiv?
I know we have limited time. I agree with what both Ruchira and Arjun said. And maybe the one other thing I would highlight is, if you think of Israel as a market, for a long time, or at least in recent years, it has a very active corridor with the US. And, it's almost considered sort of an extension of Silicon Valley sort of type innovation. I think that's going to happen as well with India to some degree, particularly on the enterprise tech side. So it goes back to my earlier comment. I think 10 years from now, it's just going to be a whole different scale, I think. So that's the thing I would add.
So on that very positive note, extremely bullish note, and I think very insightful in terms of the underlying trends and the sectors to look out for. Thank you very much, all of you. Mark your calendars. IvyCap Day is on the second Saturday of every September. So 10 years from now, we meet again and see how it's gone. But have a great weekend and enjoy yourself, and we'll meet again. Thank you very much.
Thank you all.
Thank you.
Thank you.